Monthly performance update, August rotation in focus. Market position after July. July was the sharpest setback in the current sequence. Cosmic algorithm fell 16.02%, compared with a 4.02% decline for NDXE, the Nasdaq 100 equal weight benchmark. Even after that pullback, the latest dashboard still shows an annual growth rate of approximately 25.1% and a cumulative gain of approximately 98.3% since October 2022. The drawdown materially reduced the strategy's lead, but it did not erase the longer-term compounding record. July was also marked by a sharp repricing of semiconductor and other artificial intelligence-linked momentum stocks. What the June to August rotation tells us. The portfolio has changed in stages rather than through a wholesale reversal. From June to July, Apple, Cadence Design Systems, Qualcomm and Atlassian dropped out, while Axon Enterprise, Microchip Technology, Monster Beverage and Texas Instruments centered. The August rebalance then removed Axon Enterprise, Cisco Systems, Microchip Technology, Monster Beverage, and Texas Instruments. They were replaced by Astera Labs, Lumentum, Nebius Group, Sandisk and Teradyne. 15 of July's 20 holdings were retained. In other words, 75% of the portfolio stayed in place. The model therefore did not abandon its core semiconductor, memory, equipment and cybersecurity exposure after July's loss. Instead, it redirected one quarter of the portfolio towards stocks showing stronger current relative strength. How the algorithm is behaving. This sequence is consistent with the intended process: rank, retain, replace and rebalance. The model is not trying to call the bottom in technology or predict the next macroeconomic headline. It has kept the strongest ranked core while adding fresh exposure to artificial intelligence connectivity, optical networking, cloud and artificial intelligence infrastructure, flash memory and semiconductor test equipment. The August changes are therefore best understood as a controlled rotation, not a discretionary reaction to the drawdown. First week of August, an early read, not a verdict. Only the first week of August has passed, so current performance should be treated as an early signal rather than a monthly conclusion. Reuters reported a strong rebound in artificial intelligence-linked shares and semiconductors at the start of August, helped by robust earnings and renewed optimism around capital expenditure on artificial intelligence. That was followed by renewed pressure in advanced micro devices, Datadog, Western Digital and Sandisk after earnings. The market is rewarding strong fundamentals, but it is also punishing disappointment quickly. For Cosmic Algorithm, this means the August rotation is already being tested in the parts of the Nasdaq 100 where dispersion is highest. Nasdaq 100 outlook, constructive, but more volatile. The medium-term case remains constructive because hyperscaler investment, data center build-out and technology earnings are still strong. Reuters has noted that second-quarter technology earnings have been exceptionally robust and that artificial intelligence-related capital expenditure remains a major source of market support. The counter case is equally clear. Valuations, treasury yields, inflation, Middle East risk and increasing scrutiny of artificial intelligence spending can all trigger further sharp rotations. July's semiconductor sell-off demonstrated that crowded leadership can unwind rapidly even when the longer-term earnings story remains intact. What matters over the months ahead? The most likely environment is not a simple straight-line rally or collapse. A higher volatility Nasdaq 100, with more frequent leadership rotation, appears more plausible. If artificial intelligence infrastructure spending continues to translate into earnings, semiconductors, memory, networking and cybersecurity can reassert leadership. If returns on that spending disappoint, or if bond yields rise again, leadership may broaden towards software, hyperscalers and less crowded growth areas. That kind of environment should favor an adaptive monthly ranking process over a static portfolio, provided drawdown remains within the strategy's risk framework. Key takeaway. The August portfolio is best understood as a measured response to changing relative strength. The algorithm retained 75% of its July holdings, replaced 5 weaker ranked names and preserved its core exposure to the areas still showing the strongest structural momentum. The next test is whether that refreshed mix can rebuild performance while maintaining Cosmic Algorithm's long-term advantage over NDXE. Current example holdings. Examples of current or recent exposure include Datadog, Cisco Systems, Fortinet, CrowdStrike and Palo Alto Networks. These are examples only and are not recommendations. Positions may change as the model updates. Risk warning. Past performance is not indicative of future results. Investing involves risk.